Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more week. So this is the another session of the series for US weekly market report. Now we have ended this week with quite a volatile move, and there is a specific reason for that. Yesterday, last Friday the 17th, we have a quadruple witching when all the stock and index futures and options expire on the third Friday of December, March, September, and June. So December we have our last quadruple witching for the calendar year 2021, and we have seen market has adjusted, or position has adjusted itself quite significantly, and it was aggravated by selling and the new fears that are emerging apart from the big bold decision taken by the central bank, right? So let's see what are the latest news we have before going into the charts and dealing with the charts. So yeah, so the Pfizer executive says the current pandemic will become endemic by 2024. So this is a good news, I would say, that the pandemic will become an endemic. Apart from that, so this is we are going to see. So what's in there, because I think I have explained the main reason for that, and anyhow things have quite volatile. And yes, this one. So market turbulence may be the theme in the holiday week as investors fret over the new variant and the Fed. Apart from that, we have this Goldman. So this is old one. Yeah, so let's check into that. So market turbulence ones. So these final weeks of 2021 could be challenging for investors who are hoping for a quiet and positive end of the year. The market was gripped by intense volatility in the past week. Some of that could spill into the coming week as investors continue to weigh the Fed Reserve's plan to raise interest rate and the spread of the new variant. And there are some economic reports to watch, including consumer confidence and PCE inflation data, but strategists says there might be a positive surprise from China. Now, these are the headlines we have here. And yes, the upcoming inflation data is going to be very important because it will keep on challenging the market time after time. Apart from that, let's look at the yesterday's move. So US market comes under pressure in the Friday's volatile session amid worries about tighter monetary policy as well as the ongoing pandemic. And this is all about how the indices as well as the rest of things have moved. And as I've already told you, Friday coincided with the expiration of stock option, index option, stock future, and index future, a quarterly event known as quadruple witching that typically comes with heightened volatility. Now, what's surprising here is the S&P financial sector was the biggest laggard on Friday with a 2.3% loss after bank stock outperformed in the previous session. Now, understand one thing: when interest rates are rising, banks and financials are the one who are benefiting the most. But this is a scenario which we can see in the market, that interest rates are going up, bank and financials are going down. So this is one of the things that you are going to need and understand over here. Now, apart from that, let's see what we have here. So let's directly go to the market section and let's see what the US markets are doing. So most of the indices have traded in red, and the volatility index is quite firm above 21. So this is a signal of, I would say, heightened or highlighted worry, because until and unless it started falling below 16, we can expect a downside move or a very volatile move going forward. Now, what else we have here? So these are all the commodities where everything is down. Natural gas is down, silver is down, copper is down, and egg-related commodities are showing some move. Apart from that, most of the treasury or yields are flat or on the downside. Now, what is surprisingly rising or have started rising is the dollar index. Now, dollar index have fallen quite sharply after the Fed's new policy meet, and this it was a surprising move, because it should not happen that the inflation, because of the inflation data we have here, and then comes the Fed and they said that we are done with the stimulus we have and we want to raise interest rate, and they have given a roadmap, and the yields and dollar index is falling. But now we have seen a reverse move in dollar index. So now it is clear that at least dollar index are on its right path. So let's go deal with the chart one after another, and dollar index will be the first one which we are going to see, because this is where you can see how it is going to move. And if dollar index is sustaining above 96, then definitely it is a very concerning for the overall market, because the next move is definitely going to push the dollar quite higher. So what we have here now, because dollar index have started moving higher, so the level which we are looking here is 95.95, so it is equal to 96. So if dollar index keep on trading above 96, so it is in between a range right now, which is in between 96 on the downside and 97 on the 97.1315 on the upside. Once dollar index started trading above 97.15, then the next move we have here is in between, or will start with a target of 100, and it can go up to the high of 103. So things are looking quite challenging as far as the equity market is concerned, because if dollar index started moving on the upside and this holds the trend quite firm and strongly, and I would say with a very steady move, if it continues to sustain above the current level, and once it started crossing 97.1 or 97.2, you will definitely see a very sharp move going forward. So this is one of the worries which we have here, or as far as the equity side is concerned. Now talking about the VIX, what we have here is it is not falling. Okay, it has there is a big move, no doubt about that. So from the highs of 35, it falls down to 18, but right now it is again started moving on the upside, and right now it is currently trading above 20. So 20 or above 20 is not at all a good number, right? So this line, okay, this line works like on a center line. So if it started moving above 20 and a half, then it is not a good number, because it indicates a very high volatility. Because if a developed market with a volatility of index of more than 20, it means a lot for the entire market, because you can see stock can move at any direction, and you will definitely see some big moves on both the sides. People will feel happy on the upside, but how do they feel on the downside? That's a big question. Now talking about the Dow Jones, let's go to the index now. Talking about the Dow Jones, so this is the current trend we have here as far as Dow Jones indices is concerned, and it is right now trading below 35,435. So the next two target support we have here is 35,290 and 35,070 or 35,050, and once it started falling below this, you have 34,100 and 34,000. So one must observe the level of 34,000 because this looks like a better buying opportunity rather than the current level. Now talking about the Nasdaq I think will become much more volatile because this is a high beta index and it's going to move quite violently if things are not going to stabilize, right? So this is what we are going to see as far as the trend is concerned. So this is the lower end of the range, and as far as the upper end of the range is concerned, it is something like that. So this is what we have here. Now if you are looking at the lower end of the range, you have your support at 14,880. So if it falls below this level, one should not carry forward any trend because it will be a breakdown. Otherwise, if it supports, if the support holds, or if Nasdaq holds at or above 14,880, we will be back with an upside target in between 16,500 and 16,800. Now there is another thing, because Goldman Sachs has predicted oil more than $100, and because of supply, and more than that because of demand. But right now it is not looking that much positive. But let's see what will probably happen here right now, because we can't say, right? Because estimating oil on demand simply based on demand is not a correct factor, because we have seen a lot of geopolitics has already happened based on oil, and the reasons behind that are completely different. So right now if you are looking at oil, you have what we have here. So this is the trend or the range we have here. Okay, here we are, and right now the resistance we have here is this one. So if WTI, so this is WTI crude future, if WTI crude future continues to sustain below 73.57, we have two support levels on the downside, and it is in between 62.65 and 62 on the downside. So it must sustain above 73.57 for an upside move. So this is what we can see as far as the oil is concerned. Now there is one more thing I think that will make a move, and that is yield. Yield is something which can change its direction quite sharply, and if this is the case, and if the yields also started moving higher along with the dollar index, then the volatility in the upcoming market will be huge. So we have to see. So this is the trend. This is the price trend or the yield trend for US 2-year. This is the 2-year yield, bond yield, US Treasury. So what we have here on the downside is this level, and as far as the upside is concerned, so you have something like this, right? So this is what we have here. Now on the downside you have 0.59 and 0.54, and the way it's started moving, it is moving in towards 0.76 and 0.78. So these are the negative aspects of the market, or these are the things, if you do not track VIX, that's fine, but if you are tracking yields as well as currency or the dollar index, that will probably give you a better idea how the market is going to move in the upcoming days. So if you are looking at the market right now, there are a couple of things which you're going to look at. Primarily, if the dollar continues to sustain and started moving higher, first condition. Second condition, if the bond yield started moving higher, the short term yield, I'm not talking about the long term yield, I'm talking about short term yield, and that's why I have showed you the 2-year yield. So if it is started moving higher, then you will definitely have volatile times in the market. So do not enter with a very big position. That is the first thing. Second thing, even if you want to go for a long term, I think the market is not in a mood to give a quick return, even with a longer term perspective. So make a period of for the next 1 to 3 months where you can do a systematic buying and putting some amount of money. So if you want to invest $100, so go with $30-40 in the first month, then again $20-30 in the second month, and remaining in the third month. So this is how you are going to start, putting your money in the current market, because things are not looking very good right now. So we have to see. And if you're looking at the current market, so please be specific and do not try to trade each and everything until and unless you understand the risk associated with that. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.